the general deduction formula. Let's see what it's all about. The general deduction formula consists of both a positive and a negative test. And our positive test is what we find in section 11A and the preamble to section 11A of the Income Tax Act. So if you take a look at the wording in the Act, we look at the heading first, that part in bold that tells us we are now going to be considering general deductions allowed in determination of taxable income. And then if we start reading section 11A, it says, for the purpose of determining the taxable income, all right, so what you now need to think about is, okay, taxable income means the amount that we calculate using our framework for the calculation of taxable income. So that is going to be gross income less exemptions. And the difference between gross income and exemptions is going to give me income. And then from income, I'm going to claim deductions. And the difference between income and deductions is going to give me taxable income. So when I calculate taxable income derived by any person, now any person means it's a natural person or a closed corporation or a company, from carrying on any trade. So important. When we think about deductions, the first requirement is that it must be in the carrying on of a trade. And something else to think about is that taxable income, we calculate taxable income to calculate a normal tax liability, and that is done for a year of assessment. So I'm also going to have to think about year of assessment when I think about the general deduction formula. Okay, we'll get back to this one. But so I'm going to be calculating taxable income. If it's derived by a person from carrying on any trade, they shall be allowed, all right, so that's good, it is allowed, as deductions from the income of such person, all right, so income, remember, is gross income less exemptions. So derived, expenditure and losses actually incurred, okay, that's important, technically during the year of assessment, in the production of income, provided that such expenditure and losses are not of a capital nature. So my positive test, section 11A, basically tells me what will be allowed as a deduction for normal tax purposes. But, and there's always a but in tax, the general deduction formula also has what is known as the negative test. And this we find in section 23, particularly section 23G. And section 23, if we look at the heading, says deductions not allowed in determination of taxable income. So, and this is why it's the negative test, because I'm not allowed to claim the following. No deduction, let's read through it, shall in any case be made in respect of the following matters, namely, now there's a whole bunch of others. We call these, in terms of section 23, the prohibited deduction. But the one that links to section 11A and forms part of our general deduction formula, the so-called negative test, is section 23G that says any monies claimed as a deduction from income derived from trade to the extent to which such monies were not laid out or expended for the purposes of trade. Now, I want you to read that a few times. It seems a bit complicated, right? But it's actually not. What section 23G tells us is that if something is not incurred, if an expense, any monies, is not incurred for purposes of trade, in other words, if it's not laid out, if it's not incurred, if it's not paid for purposes of your trade, then you will not be allowed to claim a deduction, right? And this is known as our negative test. So when we put the positive test and the negative test of the general deduction formula together, we end up with the components that are required for an amount to be deductible for normal tax purposes. So our components, and all of these requirements must be met before an amount can be deductible, are that there should be the carrying on of a trade, and in the carrying on of that trade we must have expenditure and losses actually incurred during the year of assessment. It has to be in the production of income. The amounts cannot be of a capital nature, and so remember, this is the positive test. This is what I will be allowed to deduct. And then I also have to think about the negative test. I can only deduct it to the extent that it is laid out or expended for purposes of trade. Now, the catch with these they are not defined in the Income Tax Act. And if you think back to our gross income discussion, the moment that something is not defined and has to be interpreted, we are usually going to have to refer back to case law, court cases, to assist us in that interpretation. In the next set of videos, you are going to be looking at each of these components individually, and also looking at the associated court cases and the principles that go along with them.